Zuckerberg has figured out how to play the Musk card and get the attention, right? I mean, basically, Elon Musk has decided that he is going to be the new face of social media. And if you think about it, the last couple of weeks, Zuckerberg is out there kind of dominating the headlines, right? I mean, he essentially said what we're going to do with both Facebook and Instagram is take the in-house censors, really, and change it to the community notes methodology, which is a win for free speech, and is kind of chasing down Musk's coattails on the Twitter/X side for that one. And then, of course, remember as well, I'd have to think about how much Meta, which at the time was named Facebook, how much it was down in 2022, but it might have been 60, 70, 75%. And it was the workforce reductions and the cleaning house over there at that Silicon Valley giant that ended up catapulting that name inexorably higher. It's up 500-600% ever since then.
But how are you looking at the future of technology stocks, Jeff, given the weighting that they have in the S&P 500, as also the NASDAQ this year, after the roaring run that these tech stocks have seen through a tightening cycle, through a restrictive cycle?
And I'll tell you, one of the things that's increasingly a concern is if you look back in last year's action, it was around March or April or so that the conversation started to become a 5% 10-year T-note in the United States. I think earlier today it was, 479 or something. And we had that ever so slight sell-off last spring. It's kind of forgotten because the S&P was up 24% last year. But it happened. It was just a couple hundred points. And if you think about the tape ever since around maybe the first week of December or so, the NASDAQ doesn't want to get out of bed. The bond market has been kind of dying with it. And that is the problematic scenario. Bonds selling off with stocks also struggling. Tech has been kind of cold, right? The Mag 7 has been relatively cold of late. I mean, I don't want to make a big deal out of it when we just have 1 month worth of action. But the stuff that's working inside the U.S. equity market is materially different from what was happening last year. The good stuff last year was discretionary, communication services, tech. Mag 7 was unstoppable. Now there's some weakness over there in Tesla, weakness in NVIDIA. It's energy and healthcare, which were the hated groups. Those are starting to get a little bit of love. The problem is it's not necessarily manifesting in value mandates, which is what WisdomTree would want to see, but we'll see if it plays out for this upcoming year. The risk is in the Mag 7. The risk is in tech stocks and mega cap growth.